Tomorrow at 8:30 a.m. Eastern Time, one number drops, and it could move the Bitcoin price very fast in either direction. That number is the CPI. If you don't know what it means or why it matters, stay with me, I'll keep it simple. Hello everyone, I'm Kai and welcome back to the Mindful Crypto Life. CPI stands for Consumer Price Index. Every month, the US government measures the price of everyday things. Your groceries, your rent, your gas, and your healthcare. They compare it to a year ago. The difference is your inflation rate. Tomorrow's release covers February 2026. Now, the most important thing to understand, it's not just the number. It's whether the price beats or misses what the analysts expected. If it's lower than expected, then that's a soft print. If it's higher than expected, then that's a hot print. Here's the chain that connects an inflation number to your Bitcoin price. The Federal Reserve controls interest rates to manage inflation. When inflation falls, they can cut rates. Rate cut means cheaper money is flowing into the economy. Cheaper money means investors take more risk out of bonds, into stocks, and then into crypto. Crypto sits at the far end of the spectrum, so it moves the most. Soft CPI tomorrow means lower inflation, which means sooner rate cuts, which means more money into Bitcoin. That's why the market reacts so quickly within minutes of the 8:30 a.m. release. I always watch this chain play out live from Dubai. And it's one of the most reliable cause and effect signals in crypto right now. Let's run both outcomes. Soft print, inflation below expectations. Rate cut bets move forwards. Risk appetite rises. Bitcoin is already above $70,000 on the current relief rally, and a soft print adds more fuel. We could be seeing 72K to 75K being tested on the short term. Altcoins usually follow, sometimes even harder. Now, let's talk about hot prints. Inflation above expectations. Rate cuts get pushed out. The rally loses its macro catalyst. Bitcoin is likely to give back some gains. And altcoins feel it more. Here's what matters for beginners though. Neither of the scenario is permanent. A hot print doesn't end the cycle, it just shifts the timing. The structural story doesn't change. Exchange supply is at all-time low. Institutions are still buying. And 20 million Bitcoin is mined this week. One CPI number doesn't rewrite that. But it will definitely move the market tomorrow. And now you know which way and why. Now here are 3 things that I recommend you to do going into tomorrow. 1. Tonight, note the consensus. The Cleveland Fed nowcast puts February CPI at around 2.4 to 2.5% year over year. That's your benchmark. 2. At 8:30 a.m. tomorrow, don't react immediately. Watch the first 15 to 30 minutes. The first few minutes are often noise. The direction is what holds the signal. 3. Ask yourself, does this change the next 30 days or just the next 30 minutes? If you're a long-term investor, one print rarely moves your thesis. The CPI tomorrow is just the first domino. PPI, which measures inflation on a business level, drops on March 18. Here's the one to mark. March 18 is also the FOMC meeting, the Fed's actual rate decision day. PPI and FOMC on the same day. That's the heaviest macro day of the month. I'll definitely be updating you when that happens. For now, I hope this helps a lot, and if you're already trading this volatility, make sure to check out the link in the description below. I personally trade at FEMEX, and right now they're running 0 fees on TradFi, and there are other campaigns available, so make sure to check them out. And if you love this type of content, make sure to leave a like and comment down below. Don't forget to subscribe to my channel. Again, this is Kai from the Mindful Crypto Life. Thanks for being here, and I'll see you on the next one. Bye bye!